Hey guys, it's Will. So when we're identifying deals in the markets, I got my glasses on again because it's so bright here. But hey, take a look at this level of sell-off that we saw at the end of the day today. And the stock market, or most of the markets in the world here, seen a little bit of a dip. Now, when we take a look at overall markets, you see the red, but then you see some green stocks, and that's actually what I want to talk to you about today. You see, one of the stocks that we'll be watching really closely when the market pushes up is going to be the bullish side of things. But the stocks that we're going to look at that go up when the market goes down are also going to be a focus. And that's actually what I want to talk to you here about. So SOXS. Guys, it's so funny. Like, I was writing it down. I'm like, I was trading during the bull market, and I remember trading these stocks and they were doing very well. Like, we were making a lot of money. You could see some of the spikes back in the bull or in the bear market and the bull market. And I remember thinking, oh, I need to remember that there's the stocks that go up when the market's not bullish. So next time when the market sells off, we could take advantage of those swings. And we actually got to take advantage of some of them last week on SOXS. And you can see with the big sell-off, this is when the whole market went down. This semiconductor company, the semiconductor index fund, I should say, it actually went up 150% when the market sold off. Because basically, whenever the market sells off 1%, this stock goes up 3%. So today, the market of semiconductors, it sold off about, what is that, 2.5%. And so this stock went up nearly 8%, just around 8%. And why I say that is because look at some of these swings we saw recently. If we do see a market sell-off, let's say the stock market doesn't have enough confidence, and for some reason, but tariffs, maybe they don't hold up. And even though semiconductors have manufacturing in the US, I just read, like today actually, this could be a really big hit, that Nvidia, one of the main companies, recently says it has a charge, a $5.5 billion charge tied to H2O processors exported to China. So it's essentially this Chinese GPU sales where Nvidia sells to China, they're getting a big tariff on it. So Nvidia to eat 5.5 billion this quarter. And it says so much for Jensen's $1 million dinner at Mar-a-Lago. I mean, that's when Jensen had dinner with Trump and Musk, I believe. It was after the president was elected. And you can see this is forcing Nvidia 5.5 billion charge. GPU Goliath the Goliath is revealed in a Tuesday regulatory filing sent to its stock, tumbling after hours today, just a little bit. But first quarter results are expected to include up to approximately 5.5 billion of charges associated with the H20 products for inventory. Essentially what that means, guys, in layman's terms here, Nvidia most likely has a bunch of H2Os. It thought it was going to be able to sell to the Chinese, but now are taking up space in a warehouse while it waits for the Trump administration to decide whether it's I don't know why I say scheme, whether it's selling to China to build half a trillion bucks worth of AI servers in the US is a big enough bargaining chip to grant the necessary export licenses to free those particular GPUs. In other words, the US is saying, it's fine, you can send it out to China, but you're going to have to continue to build some big data centers here. And you can see some of the manufacturing that's expanding to the US, TSMC, so Taiwan Semiconductor, they are valued more than even Tesla. You got Wistron, Foxconn, and others. And the reason that this is, I would say, important is because you have this crackdown of NVIDIA accelerators with China. You have the US saying maybe not as much sales. And what does that mean? Well, last time the big semiconductor market dipped just a few days ago, really about a week ago, there was a 150% swing on SOXL. So this time, or SOXS, this time, if the market decides to dip, I mean, we're going to be looking to potentially play it tomorrow morning. If semiconductors sell off and that's how the market's moving, you can bet the progress that we make in growing our account doesn't just come only when the market is going up. It also comes down to being able to capitalize on moves if the market sells off. So that includes us totally removing ourselves from the bull side of the Nvidia or the semiconductor market, which we'll see how it reacts in the morning, and then potentially entering a trade tomorrow morning on SOXS, depending on how the market's reacting to this move. And we could see some sell-offs. And if it is extended, if it's real, this could be a really good time to trade the semiconductor market bear. So we'll be watching in the morning. It's been making big moves. If you guys want to watch me trade live, join Stockmates. I would encourage you to simply take a look. It's the second link in the description. We got a huge sale. Doesn't get better than this. Would love to see you guys there in our live session tomorrow morning at Market Open, 6:30 a.m. Pacific Daylight Time. If you want to join us, again, we'll be going live there to trade inside of Stockmate. So inside of Stockmate as well, one thing we just recently added was the earnings targets, which we have coming out. Taiwan Semiconductor reporting later this week. Some big tech companies, as well as what we believe is next for their companies in the near term. So feel free to take a look at those resources as well as a book there that we have for mindsets. Right now is a really good time to trade with a plan. So if you are struggling with trading with a plan or emotions are getting in the way, I would encourage you to also check out this book if you decide to get into Stockmate. I recently wrote this book I wrote this book a while ago, and it's the philosophy of a profitable trader. It was when I was struggling. I wrote this book in 2018, and I was really struggling with the mindset of growing my account. And I needed to differentiate between ordinary thinking and profitable thinking. Ordinary has no reward vision, no plan. They're emotional. They have fear of missing out. They invest in pump and dumps. They trade just for profits. The profitable, they have a risk reward vision. They have a trading plan. They're disciplined. They have patience. They invest in companies that meet their criteria. And I kind of go through the difference. I share my story, but most importantly, I talk about how to actually learn. How do you actually learn? Not just learning like the actual stuff, but how do you make sure that what you learn sticks? So that's something that we cover, as well as the thoughts of the ordinary versus the thoughts of the profitable, ingredients for profits. So we got some ingredients here, shift in attitude. There's some really good stuff for your mindset of 95% versus 5%, as well as some emotional IQ as well, which we all know is so important. That, again, I put this together for myself. It's something I refer to time and time again. Things get shaky in the markets. So if you ever want that book for free as well, it's included in Stockmate. So would love to have you guys there. It's that second link down below. And for those of you guys that enjoyed, I would appreciate a thumbs up if I earned it. Do consider subscribing, and I'll see you guys in the next video. Take care.